Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's keep up with the analysis of the gold market. So actually gold market was standing quiet in recent session, mostly waiting when the other markets catch up with the performance of the gold, because gold, as you could see, has shown really significant plunge recently, and other markets is just coming to the levels that where gold already stands. So just a few moments ago we talked about the euro currency, which actually is just coming to this confluence support, similar confluence, and to the daily oversold. And gold market already is waiting for the euro for a second session. What trading stops we have in place? So double repo pattern that we were trading last week mostly is done. It's just because it has reached the minimum target. So around 50% of the thrust of the double repo. So mostly we could say it's completed, and we can't bet any more on it. Besides, market sensitive result and strong confidence support, it makes no sense to consider the currently new short position. So for taking the new short position, you have to wait for some bounce. It means that for a bearish nothing to do currently, you could just wait for a pullback and then consider the new chances for taking the short position. It means the only direction that we could trade currently is up. On the daily chart, we have the, as we talked about this recently as well, we have the actually Napoli bullish stretch pattern. It's a combination of the market oversold and fib level. And here in our case, we have not just the fib level, we have the strong confidence support. So potentially it's very good background for pullback, which is great, nice intraday scenario for taking the long position. Besides, here we also have the trend line, inside trend line for the gold market. So if you are interested with this setup, you could think about taking position based on it. Despite the trend stands bearish, we have the bullish directional pattern, and it's according to the Napoli direction overrules trend. It's the same was with the double repo. When the trend was bullish, we have the double repo, which is overrules trend as well. So on the lower time frame, what we have, although we suggest that the chance for a pullback really significant, on the 4-hour time frame chart we do not have yet the clear pattern that could trigger this pullback. So actually market now is forming kind of the triangle consolidation, which means that probably another final leg down could happen before any reaction will start. Among the possible targets of this reaction, I would suggest 1895, 90 even, somewhere in this area, because for the daily oversold 1880 stands too close. This probably should be a bit more extended. We will see. But currently the performance on the 4-hour time frame chart is mostly suggests existence of the bearish dynamic pressure. So we have the bullish trend, but performance here is not quite bullish, it's mostly flat. It suggests that chances on final downside action still exist. And in current circumstances, despite that we have great combination on the daily chart, we still should be patient and wait for a clear pattern. So once it will be formed, it will be safe to consider taking the long position. Particularly speaking, on the, as usually happens with the triangles, on the hourly chart, I suggest something of this kind. Besides, on the hourly chart, you even better could see the bullish bearish dynamic pressure. So you could see the trend, that the performance mostly stands to the downside, slightly stands flat, but here you can see strong bullish trend by the MACD. Well, and from that standpoint, it means that these lows might be taken out, and market could show the butterfly is around 1854. So once butterfly will be completed, we could use particularly this pattern for position taking and hiding stops just below the 1618 extensions, maybe 1845, 1846, very near standing stops, and all this stuff will happen around the confidence support on the daily. So as you know, the action and to act with patterns, it's always better when you act without patterns. Of course, you could directly take the position based on the daily chart, placing the stops somewhere below this area and see what will happen. If you would not want to go through all this mess with the patterns on the lower time frames and watching for a market through the whole day, finding the points where you could take the position, but your risk reward will be a bit worse. But in general, you also, of course, could take the part with the possible pullback. So the choice is up to you. You could just take position on the daily chart, place the stop somewhere in the same area, around 1845 maybe, and just see what will happen. Or you could try to catch the pattern, place the stop in the same area, but your entry probably will be better. And that's actually the only some difference in these approaches. But in general, all things stands as we just have discussed. For the bulls, you could consider taking a long position if you trade on the intraday charts based on the patterns that we have for the bears. Currently, I do not see something to do. It's because market that they were sold, it's strong confidence support, so it would be better to wait for some pullback.